Hi, everybody. This is Eddie. Going to do a quick market update for next week. So we have a nice little reversal there at a support area last week. So we did test this 3,900 area. We dropped slightly below and we came back above. And then we formed like this little reversal candlestick pattern right here with the down day, the doji, and then the up day, right? So on Friday, we have pushed through the moving averages right here. It does look a bit bullish at the moment, but things can change pretty quickly, right? So a key level to look at is this area right here. It's more of a zone where than a exact level. So this is the zone I'm looking at. This was the consolidation of this area right here. Also, this congestion area right here, right? So we're approaching right at that area. And on Monday, what we're looking for is to see if we're going to get continuation. If we do, most likely we'll push up to around the top of this zone and then find some resistance there. So on top of the zones around that, I think 4190. Let's just call it 4200 area, right? So we're going to come up and test that area. That area is the high of this consolidation. Also, the 100-day moving average is right there as well. And we did have a 3-day update already. So usually the third update is where people start looking at taking profits. So on the fifth update is usually when a lot of people take profits, right? So if we're going to get two updates, we're going to probably hit the upper range of that consolidation area and hit that 100-day moving average. So, and looking at some of the indicators here, these more delay indicators, right? But the RSI is breaking above the moving average, which is a good sign. MACD is kind of starting to try to cross back above the zero line, and momentum is shifting back up, right? But next week, I think the CPI numbers come up next week, so that's going to be a huge indication and going to pretty well lead the direction into FOMC meeting, right? So if we have a cooler than expected CPI, you can expect that we can probably break out this range and continue higher. If we don't, and we get rejected after CPI numbers, right? Expect we'll make a new leg down. This is a key area to hold right here. If we break lower than here, we're definitely going back down to test the June lows, right? And then if the June lows break, and then we're going way, way back, like I've been talking about, like back to pre-COVID levels over here, right? So it is definitely something to watch out for next week. I forgot what days coming out. I think it was Tuesday maybe that the CPI numbers come out, and then the week after that is the FOMC meeting. Right. So in FOMC meeting is going to be the big market breaker. It's either going to make or break the market. Right. We're right in the congested area where a direction is about to happen. It's in like this little choppy range right now, right? Because everybody's just waiting for those numbers. And remember, this is September. In a midterm year after option expiration, they tend to go down, right? They tend to go down to about mid-October, and then we find a bottom, and then we go higher. We shoot back up towards the end of the year. So I do expect we're going to get some kind of rejection on around this range. But if the CPI number is cool enough, it could trigger a short squeeze because there is a ton of people shorting right now. The put call ratios are extremely high at the moment, and it's very high shortage percent. So whenever there's a lot of people buying puts, the markets tend to squeeze them, right? So if there's any kind of news catalysts that are good, you can squeeze them. And when they get squeezed, they're going to start covering. When they start covering, just going to feel the rally, right? So you could get a really violent rally if people like what the CPI numbers are, or people like what Jerome Powell going to say at FOMC. So just get prepared for that. One way to really play that before FOMC meeting, the day before, just buy a long straddle. If it's going to a huge move, most likely it's going to be over 100-point day. If that happens, a long straddle, without knowing the direction, you can make a lot of money if it's if the straddle moves more than what the cost of the option is. Usually the cost of the options for a straddle the day before FOMC is about $50. So if the move is above $50, you want to start making money on it. So that could be a play that you can do. Right. Anyway, let's take a look at some stocks. Here's a short list. So let's take a look at Apple. So Apple is kind of lagging behind the index and some of the other stocks. So it had like this really huge run, right? And it's pulling back. It found support around the 50-day, not 50 days, sorry, the Fibonacci 50% retracement area. And we're right at the 50-day moving average. There's a cluster of moving averages right here. So it needs to go above this and then start trending higher, make a new high, right? If that's the case, this is wave one of the reversal. And then you can create wave two, which is usually a much bigger wave up. So if that's the case, then we would get a nice rally up and make new highs, right? If this gets rejected, then most likely we'll come back down. We're going to retest the lows over this area right here. So it's very similar to the situation of what the indexes is going to do, because Apple makes a huge percentage of the index of the S&P 500. So whatever Apple does, whatever the index does, is going to reflect on what Apple's going to do as well. Okay, Google. So Google has this range right here. Google has this range, and we're at the bottom part of the range. So there could be a trade here. This is you could do a short-term trade. If you don't want a lot of risk, you would do a defined risk trade, which is selling an at the money put spread. Probably you can probably do a $10 spread on this, and then your risk reward should be around 1 for 1 or 1 for 1.25, right? Meaning that you're going to collect quite a bit of credit, and your risk is only about the same as your credit, a little bit more than your credit, right? So that's a fairly good risk reward trade in a higher probability trade, because we are at the bottom of the range, and then if it does bounce back up into the upper range, then your spread is going to decay worthless, and then you're going to collect the premium. So that's the way I would play this. If you want to play the long side, right, you can buy a 45-day out at the money or in the money 70 delta call, and then you would have to set a stop on that, because if that drops below this low right here, then you can complete breakdown and go down to the 200-day moving average on the weekly, right? So this is a very key area to hold. So if you do it with shares, it's easier. Shares, all you do, you buy the shares, you set your stop below the low of right here. So that's about a 10% risk. Not even, it's probably like, yeah, around 7% risk, right? So 70%, 7% risk for potential to make let's see, measure that. 10% on the upside and downside, yeah, 6%. Almost a 1 for 2 risk reward. So it's not too bad for the play. If you want, you can also do a call spread as well if you want to play the call side. But put spread is probably the best play for this type of scenario, where you expect a move up towards there and then come right back down anyway. So a put spread will work perfectly right around this area right here. So you can say a put spread. If you want to go out of the money, you're gonna have to set a stop on it. Usually we have a rule for stop loss on out of the money put spread. But if you want to do it right at the money or slightly even one strike in the money, it's very doable. And if it does rally back up, you want to get the nice juicy premium for that. Microsoft, very similar to Google, is like trading in the range. That's the major support area. So if you look at the weekly volume shelf, there's a lot of demand volume right around this area right here. So it's been holding this area for quite a bit. And there it is part of a downtrend, right? So but if it does break above the moving averages right here, it's going to go test the 200-day. It's going to probably do what the index is going to do. So if the index is going to go up, Microsoft's going up. If the index going down, Microsoft's going to go down with it, right? So same scenario right here. If you want to play this, do a defined risk trade. So using options is the best way to do that. So for me, like for where the volatility and there's no clear direction, selling put spreads is the best way to go. Your risk is very small. You also don't capture like a big profit, but you get a pretty decent profit for put spread, right? It's a nice one for one risk reward. So if you want to take a trade, that's the way to do it, right? Not knowing as long as the price is above this area before expiration, you get to keep all the premium. So it's a high probability trade, especially when you're just in the low end of the range, right? Nvidia, Nvidia is going to have a pretty tough time with that news that came out that they couldn't sell to China on their new chips, but it is at like a major support area. So it came down to the weekly 200-day moving average. If you look at the volume chart right here, that's where majority of the buyers are, right at this area. So if you want to take a gamble on this, like if you want to take a trade on this, best way to do it is with shares, and you can use stop, right? If it goes below 120, it's done. It's completely done. If you want to do with shares and keep a tighter stop, just keep it below this consolidation range right here. So around 132. So about $10 stop on this stock. So if it does go up, there's a chance it can go up to about 170, right? 170. And then if you really go up, we go back up to test the high of this area right here, which is around 190. That's a fairly good risk reward trade, right? Because that's about the $40-50 upside, and on the downside is about $10. So that's a very good risk reward trade. You can also sell put spreads here as well. Put spreads will probably do pretty good. I would set up around 130. Do like a $5 or $10 put spread that you can do on that, and that's a fairly high probability trade if it bounces. SMH is very similar to the other semiconductors. It did make like a higher low before the bounce, so it is good. If you look at the weekly chart, it's trying to find some kind of support around this area right here, around the 200-day moving average. So, like with that news that came out about not being able to sell to China, is kind of hurting this entire sector. But some names in this sector that are actually doing quite well. It's just that some of the more popular names like Nvidia and AMD are not doing so well. So same way to play this. If it does go back above the moving averages right here, it's going to retest the top right around this area, around the 200-day moving average. And if you look, we're in a clear downtrend. So, in order to play the upside in a downtrend, you have to be very quick on your exits, and you have to have a pretty tight stop. You should always have a stop when you're trying to counter trend. Otherwise, if it reverses on you and you don't take your stop, it's going to hurt really bad for you. Right. XLE. So XLE is kind of interesting. I thought it was going to come down and kind of break like this area right here, because it looked like it was going to break like the neckline, but he actually bounced back up. So we have a low, higher low, and start going. And now we're looking for a higher high. If we do go for a higher high, we could probably test the high of this area right here. Oil prices are coming down, but energy stocks are not coming down. Energy stocks are still keeping up because they're still printing money at these prices. Anything above like $70 a barrel, they're making a lot of money. So the they're the stocks within the XLE in the sector is still doing really well. A lot of the high quality names are still keeping in trend. Although the oil prices look like it might break the neckline. If you look at what's it, the USO? Yeah, so USO, if we look at USO, it's not doing well because it's like a head and shoulder pattern and it's wrapped in neckline, and it looks like it might be breaking the neckline pretty soon. So let's see what happens in that sector. Amazon is doing quite well. It came down, it kind of filled the gap. It filled the gap and start bouncing back up. So we're above the moving averages again. So if the index is going to stay up, we're going to most likely test the 200 day and then break above that area, which is up here at around that 148. If we can break above 148, we'll make a higher high, and then we're going to be on the way back up again. So Amazon is one of the names I am looking at to accumulate some shares for longer term. I am looking for a pullback in order to do that. At the moment, all I'm doing is trading it. But if it ever comes back and retest that 100 and then holds, that's the area I'm going to buy. So that was the pre-COVID levels around that 100. It came down to it. Well, I did kind of trade it a little bit on Amazon around this area, but I kind of took the exit pretty quick because the market conditions just was not there to hold anything longer. So I kind of just traded it. Right now, it's kind of there's a little trade from here to the 200-day moving average. So to play that, you can actually just sell put spread. I would probably just do a weekly put spread because most likely by FOMC is going coming back down. So so you just want to do a very quick trade. Probably take profits around 60 to 75% decay on the spreads, and then yeah, that's a trade that you can take for a little bit of cash flow. AMD is down on this major support, just like Nvidia is. Right, this $80 area is a key support. Between 70 and 80 is your major support zone. As you can see that there is a ton of volume around down here, so there is some accumulation going on. We did make a higher low and start bouncing off that, but we're below the moving averages. So you have to watch these moving averages very carefully. If it gets rejected, it can come down lower. So to play that, if you really want to play that, you could either wait to see if it breaks above, and then you can trade it up, or if it gets rejected, you can short it, right? You can also, because it's trending in a little bit of a range, you can probably do an iron condor in that range for like a shorter time frame. Iron condor, you probably work. The upper range would be like around right here, and the lower range would be down here. So if you really want to trade, you can do it that way as well. Anyway, that's just a quick little update. I will see what happens next week. Like I said, this market is great for day trading, not great for swing trading because it's very moving market. And there's a lot of news out there. It's not good if you're short either because shorts get triggered with these big, huge momentum moves up by short squeezes. And if you go long, and they tend to get rejected at key resistance areas as well. So and a lot of breakout plays are not working out. They pop and then they get reversed down. So make sure if you're swing trading, keep your stops tight. Go smaller size, take profits earlier, and lock it in, and just scale out at different levels, right? If you want to cash flow in this market, learn how to day trade, right? Because I do have a day trading course coming up on September 19th, which is about a week away. It's going to be a 6-day course. It's about 2 or 3 hours per course. We go through the setups, we go through the psychology, we go through the fundamentals and chart analysis and all of that stuff. And then we go do question and answer, and everything will be recorded for the course. You also get like a 1-year Discord and get to follow how I trade throughout the day. And we once in a while, I also do live trading sessions during market hours to walk you through the setup and walk you through the trade that you could do and stuff like that, right? So if you guys really interested in learning how to cash flow, it's not really time consuming. Majority of the people, they only trade the first hour or first 2 hours of the market open, and then they take the rest of the day off, right? Anyway, link is in the description below. If you're interested, send me a message on Facebook or join our Facebook group. Is free. You can contact me there as well. Anyway, talk to you guys later. Thanks.